What's up everyone, it's Kari with Money Investing. Welcome on board to yet another Market Open live stream. Today is the last day of the week. It's also Quadruple Witching Friday, September 17th. So T-Vol index should be expected to spike here towards the end of the day, not in the morning, but towards 4 p.m. And volatility, we'll see what happens with that. We are trading past over 20 levels for the VXN, and the VIX is still coming down, so we're only up over 32 basis points, but we're just over 18.76. So thank you so much for joining in, Myhon, Caesar, Overodd, Alonzo, Eduardo, everybody, thank you so much for joining in. I really appreciate you guys' support. We got the S&P down most, down about 36 basis points. We got the Dow Jones pulling back a little bit over 26 basis points. And then we also have the QQQ index ETF pretty much flat so far. Nothing crazy, down just about 6 basis points, with Ethereum pulling back a little bit over 3.6% here. With the RSI pretty much at neutral range. And then we got Bitcoin. Let's take a quick look. So Bitcoin is just a little bit over $47,000. So 47,312 to be precise. We are coming down similar to the Ethereum. So Bitcoin is down just about 90 basis points, and this support is going to be aligned with those moving averages all the way as low as this 42,000 level inside that green rectangle for Bitcoin. So we are going to go over individual stocks. Apple is pretty much flat, but before we do that, I want to quickly go over some of the events from today. So Manchester United reported quarterly loss that was 6% narrower than what it lost a year ago, amid a roughly 16% increase in revenue. Guess where that revenue increase is coming from? Probably the sales of CR7. I'm just kidding. That would be like next quarter, because he just got in. So pretty much not even reacting all that much. Man United, let's see, Manchester, is that the one? Yep. So about down 68 basis points. 1750 is where it's trading at. Messi is the best. This debate again. But anyway, so General Motors plans to extend downtime at 7 North American factories as the worldwide semiconductor shortages continues to crimp production. U.S. Steel, so ticker symbol X, is planning to build a new U.S. Steel mill, with construction beginning next year and production planned to kick off in 2024. And the move comes amid booming demand for steel, as well as prices that have roughly quadrupled since the summer of 2020. Talking about Take-Two Interactive, so BMO basically downgraded the stock, so the video game maker's stock fell 1.3% in pre-market as BMO Capital downgraded the stock to market perform from outperform, and the earnings estimate for Take-Two had been on the high end of street forecast, but it said it now is less confident following a series of video game release delays. That's good. That's good. That's what I like to see. I want to see some downgrades so the stock can stay down. It can come down so we can start buying more of this company. U.S. stock futures fell Friday. Again, we are coming down. That historically September 17th has ushered in a rough patch for the market, and an early, already traditionally tough month. So we'll see what happens. Fed Chair Jerome Powell has called for a review of central banks' ethics rules for appropriate financial activities after disclosures that several senior Fed officials held significant investments and other made multi-million-dollar stock trades in 2020. And news of the Powell inquiry followed letters by Senator Elizabeth Warren to the Fed's regional bank presidents demanding stricter ethics. So that was actually very interesting, because the people that are controlling the narrative in monetary policy are apparently making multi-million-dollar stock trades, and they did in 2020. So take those profits. Another strategist with some type of a lot of neo analysis here. What is going on? Is it dropping here? Pretty much flat. There's nothing going on with NEO right now. We've covered literally yesterday. I'll go over it in just a second. But definitely, yeah, we'll cover that. Don't worry. But another strategist basically saying take those profits. And Paul Gambles, who's the co-founder of investment advisory firm MG Group, says investors should consider significantly building up their cash positions. So that was very interesting. Reading further, he basically said the financial markets appear vulnerable to what could be an extreme move in either direction. As a result, Gamble said investors should consider sitting on the sidelines and build up their cash positions significantly. And his comments come as market participants remain cautious given flurry of risks on the horizon, and these include fears of rising inflation, persistent concerns about the economic outlook amid the ongoing pandemic, and of course supply chain shortages and valuation concerns as well. It's a coin flip, and he basically says, MBMG Group, which says it has over 1.5 billion in assets under management, has looked to raise cash levels quite dramatically of late, warning market risk ahead. Suddenly gone up and off the scale compared to just 1 month ago. And gold miners were one of the best ways to hedge risk, but they've also been coming down substantially. So, all right, that's that. Thank you so much for joining in, everybody. We'll go over some individual stocks. We got about 7 minutes left for the markets to open. But let's take a quick look. Chad, thank you so much. Morning to the best technical analysis channel on YouTube. Thank you. Thanks, I appreciate that. So, all right, let's take a look at NEO first. So we are still in a downtrend pattern. Nothing happening here pre-market. We're only up over 30 basis points. Support level I'm watching roughly 36.50. And resistance is going to stay put at 41 all the way as 45.50. We talked about it yesterday. Nothing's changed since yesterday. So we're still trading in this downtrending channel, making lower highs and lower lows. Near-term support 36.50 all the way as low as $34. Resistance is going to stay put at 41 all the way as 45.50. If you can get those couple breakouts, regain momentum back over those moving averages, that's when I see some higher highs and higher lows and some more bullish sentiment for NEO. But for the time being, it's still trading below those moving averages. We're still struggling to actually break out from this downtrending channel. So that's something to keep in mind. Let's take a quick look on SoFi. SOFI, and we are tagging our 50 EMA. So if I remove all this, you'll notice that we have consistently for the last 2 times we have actually gone rejected at that 50 exponential moving average. You'll notice that previous resistance here, resistance over here, and right now we are just tagging that level once again at 1575. So that is going to be a very important level to watch. That's also aligned with our lower highs, so it's going to be the lower high and lower low pattern, so like the downtrending channel here for SoFi, and seems like the bullish divergence is starting to play out. So this right here is the positive divergence or the bullish divergence that we're seeing for SoFi. That could lead to a potential reversal, and that's exactly the whole thesis, that bullish divergences do lead to a potential reversal. That's exactly what we saw back here when there was lower lows formed for the price, higher lows for the RSI, then a huge breakout of 74%. And right now, almost an identical pattern. This is literally chart for chart, an identical pattern for SoFi with the lower lows and the higher lows for the RSI. So if you get that breakout over 16.50, then I wouldn't be surprised for us to see a retest of $19, $20 for SoFi as that momentum comes into the market for SoFi. Let's take a look at Foot Locker. We haven't actually gone over Foot Locker in a long time. This stock actually broke down from like the moving averages recently. So you'll notice that earlier it was making this higher highs and higher lows, so strong uptrending pattern. This right here, again, we're just trading inside this higher highs and higher lows. It's validating those 50 exponential moving average. And this right here was the breakdown. And that was actually the start of a new downtrending channel where we continue to make these lower highs and lower lows, right? So first pattern, we're going up. Second pattern, we're now starting to come down. But overall, you'll notice that if I were to pull back on the chart, we have gone rejected almost exactly at this level at $67 a share, coming in from 2019 in March. So this was the resistance to watch for Foot Locker, and after hitting that resistance, we've started to trade in this downtrending channel. Certainly oversold. RSI's come down to below 30. MACD's come down to being oversold as well. So definitely very oversold. So I would keep a close eye at that 300 SMA. This could represent some type of a swing trade here or a reversal trade. The yield is good, 2.4%. Let's take a look at the valuation here. The revenue has been pretty stable. 5 times earnings and less than 1 time sales. The valuation is very, very good. The balance sheet here, just a quick update. So debt is a little bit high, $1.8 billion in cash versus $3 billion in debt. But definitely this is going to be on my watch list here. I'm going to add in some alerts, and I'm going to continue to kind of monitor the stock because it does have some decent yield, and it's come down substantially from where it was just a few months ago. We're looking at a drop of a little bit over 26% for the company. So 300 SMA, first to watch, all the way as low as $44.78 for Foot Locker. Let's take a look at DraftKings. DraftKings pulled back after hitting almost our target and resistance at $65. So that is a resistance that we're talking about. For DraftKings for the last, I want to say like a few weeks, we actually saw a breakout from this bull flag. After this breakout, after this 55.50 level got broken out. So I think we actually did a video on this around that time. And since then we actually rallied nicely over 17%. After hitting that resistance, take a look at the RSI, the MACD, it was overbought, so no surprises there. We're seeing a little bit of a pullback here. 55.50 is going to be that next support level to keep in mind. Resistance is going to stay put at 65. We're just consolidating sideways, just trading sideways. DraftKings was pretty much flat yesterday. Let's take a look at Costco, and then we'll go over to Lucid. So Costco has been on a strong uptrend here. So definitely, pushing higher. it is kind of, wow, this is a strong pattern for Costco. From March 2021, it's up over 51%. So, the beta is low, so it's not seeing those significant moves. But this is more consistent, right? This is more of a consistent pattern to the upside. The RSI and the MACD not quite overbought, but still pretty elevated for the RSI, at least running at 64. And right now, I mean, it feels like we're just following a different path here for the 21 EMA. So, we're forming a shorter moving average here from the 21 EMA. In the past, you'll notice that we just push higher, consolidated sideways. So this was kind of like a symmetrical triangle before we actually saw that breakout to the upside, then continue to push higher. A couple retests here on the 21 EMA before pushing higher. So I would watch that 456 level for Costco. That's the 21 EMA. The buyers have stepped in at that level. In case we see a breakdown, then all the way down to 440 is going to be that 50 EMA. That's the next level to watch as a support. Let's take a quick look on Evergrande, right? So that was a stock, of course, 3333. It was down a little bit over 3.4% today again, and just a lot of volume coming in. And this is a company that's on the brink of bankruptcy right now over in China, and they are potentially going to default on substantial amounts of interest and loans that they have. Now, for us to really understand if this is going to have a ripple effect on the economy, I mean, there's a lot of things that we need to kind of dig deeper into, but this is certainly a global risk for just markets over in the US and Europe as well. But we'll keep it on watch. And this is, again, a very, very sensitive issue. How much this stock has come down is just crazy to think about. Just at the beginning of this year, this was a $17 stock. It's come down to $2.54. So that's a 87% crash here for this company. So absolutely astronomical. Look at the amount of volume that came in. So we'll continue to kind of monitor this moving forward as well. All right, so let's take a look at the markets here and how we are trading the Nasdaq ETF, slightly down 40 basis points here. Let's do a quick poll because we've also got Quadruple Witching Friday today. So markets today. All right, the poll is out. Let me know what you guys think. We got about 15 seconds left for the markets to open. And we'll go over Roblox in just a second. I'm just going to set up some charts here so that we can watch individual companies very closely. We've got Apple. We'll set up Amazon over here. We'll put Tesla. And let's just put Palantir because Palantir had a really strong day yesterday. And let's see how Palantir trades. So, all right, BABA, 158. So BABA did get bought up yesterday from lows of, I think, 153, 154. So Mark, what's going on? BABA is, I think, green. Let's take a quick look. Yeah, so it's up over 1.3%, back up to 158. Amazon pulling back a little bit, 30 basis points. Apple doing its morning routine, just pulling back a little bit, and so is Tesla. Pretty much flat so far, and Palantir also slightly down about 24 basis points. But let's just switch over to our actual indices. 60% people so far say that it's going to be a red day. Kind of interesting. And but yeah, yesterday also the dip got bought up, right? I mean, the markets were down pretty red. The S&P all the way down to 44, 43, but the buyers stepped in right at 11 a.m. Like right before or after lunch, we see like a lot of buyers step in, almost every day, or it's been happening for a long time. But yeah, Dow Jones pretty much flat. We got the S&P down about 17, and the Nasdaq is down more now relative to where the S&P is trading. Volatility index pushing up a little bit over 2%, so back over 1911. And we got some of the individual stocks pulling back here. Let's take a look at Alibaba. So 1.5% back up to 158. So that's good. That's very strong for Alibaba. Let's take a look at some of the individual stocks here. All right, let's start with the ones that are green. DATS up another 6%. We got Upstart at $300 a share. Oh my God. I mean, this stock is at 300 now. Wow, just wow. Absolutely phenomenal momentum here for Upstart. And it hasn't even seen like a proper pullback. It hasn't even seen a proper correction. It's just continued to rally, right? I mean, we've seen a couple days. I can count like a handful of days that have seen like a 5 to 6% drop here. Once was like back in August 19th, 8% drop. And more recently on September 10th, 6% drop. That's it. And it's now at 300. Baidu pushing up, that's good. Mark says I had 100 Upstart shares and sold a month ago. I wanted to throw up in my mouth. That's unfortunate. That is really unfortunate. I feel for you. I feel for you because we had a position here at close to 110. We trimmed at our target and our resistance 175, but I'm glad that I didn't trim all of it. I trimmed like 50% of the position, but still have the rest. But I definitely feel for you. Zoom is at 280 now. So Zoom's starting to push back higher. Support level at 272. Yesterday's low was roughly at about 273. So we are seeing a little bit of a bounce back higher from these levels. We'll see if we continue to break it down. But this is a support that we have previously validated in the past, coming in from like May 11th. A lot of buyers stepped in at that price point. So we'll see if Zoom perfectly validates 272-ish, 273, and if we start to move back up, or if there's going to be some more weakness for this company. So continuing on this screening, we've got Alibaba back up to 1.5. NEO is pushing up over 1%, nicely back up to 37.50. We got Upwork up to 47.50. DraftKings is up another 1%, back over $60 a share. Fiverr has been doing nicely as well, so broke out over those moving averages. And our gap that we need to fill is shrinking. So we only got this much left to fill after the gap down that we saw. So huge gap down, a little bit more momentum to the downside, push higher, resistance, breakout, and right now we're breaking out over those moving averages as well. You've seen the lovely battle Crocs I sent you? No, I haven't seen that. We'll take a look at Crocs in just a second. But Pinterest is up 1.3%. We've actually been buying a little bit of Pinterest ourselves at $54 support, so that's good. So slightly moving up. You know, this again is support level that we validated previously in the past for Pinterest. So we'll continue to watch that level as a support. Let's see. So Spotify up over 70. We got Twitter. Twitter's up over 1%. Take-Two Interactive. I want to see where that stock is trading at. Let's take a quick update on that. So we're down another 1.68%. So breaking down below 150. Next support to watch is going to be $140 a share. So I'm going to actually go ahead and turn this level into a resistance to watch for Take-Two Interactive. So that's going to be the level to watch. Again, this is one of the stocks that's in the red. First, we're going over the ones that are green. We've got Wish pushing up. Wish definitely pushing up. So up over 71 basis points. Support at $6.08 for Wish.com. So gamers unhappy with Take-Two Interactive. Take-Two Interactive continue to fall into Value Town. That's true. Okay, so again, today's catalyst for the drop is the downgrade from BMO. You know that was the biggest catalyst for the company. So if you come over here, you'll notice that it basically got downgraded from outperform to market perform, and they basically said that they are less confident following a series of video game release delays. Right, delays have been a big issue for this company, but that's normal for any video game company, in my opinion. So we'll continue to watch this and add if it continues to drop and brings us a better value at those levels. So all right, Twilio, we got an NTM pretty much flat, nothing crazy. We got AMC down roughly about 1.4%. So we got a rejection at $50, roughly at $50 a share. So next support is going to be unfortunately at $40 once again to watch for AMC, because we're trading between that range. Amazon flat. We got Peloton pulling back a little bit after the recent rally. So it's now down to, wow, it dropped rather quickly here in the last couple of days. From 118, it's down a little bit over 12%. 102 is going to be that next support level to watch for Peloton. Google coming down a little bit. I'm sorry, at 300 unbreakable. So Google at down about 0.5% here, 28.73. So we're gonna be watching this very closely. I might as well just buy it. At this point, I'm just like, 1.9 trillion. We got the revenues growing, margins growing. All right, we got price to earnings at 31, price to sales at 9. So okay, so that's interesting here. For VRTX, Vertex, let's take a quick look. Dropping even more. So 185 breaking down below this 185 support. And the next level to watch here for Vertex, actually going to be a lot of buyers kind of stepping in around like 175-ish, previous support. But I think a much stronger support for Vertex is going to be 164 level, right? 164 is going to be a much better level of demand, and I can't even imagine the valuation at that price. I mean, the valuation would be an 11% drop from here. The price would be like the valuation would be far lower than where we're trading right now. So it's on my watch. We'll definitely be adding more. Southwest up over 63 basis points, so pushing higher. Now starting to break out over some of those moving averages. The one that's really important to break out is going to be $52. That's kind of like the red line you guys see on chart here. And if we can get a successful breakout over this level for Southwest, then I could see some more upside potential here for the company and potentially back up to, we're talking like mid 50s to as high low 60 levels for the company. All right, so let's see. So yeah, it could still hold 185 and consider just be range in that box. That's true. Vertex could still close above 185 on the day like it did yesterday. I think yesterday we dipped all the way down to lows of 185, but then we ended up closing at 187. We ended up closing at 187. So we'll continue to watch that 185-ish level for Vertex Pharmaceutical. All right, let's see some of the growth stocks and how they're doing. All right, so we got NetEase down, Take-Two Interactive starting to get bought up here a little bit. Walgreens is down again, down almost 1%. I don't know what it's doing in my growth watch list, but it's somehow here. We got Pubmatic, Roblox, Sam. Also, this is a Boston Beer. This has been a consistent downtrend here. I'm doing some analysis on this, some fundamental analysis on this company definitely because of the growing revenues but less confident management. So definitely low valuation for the company, but the only problem has been the downgrades and some institutional selling after the earnings, as this company has just continued to sell off because of the weaker guidance the management has provided us. So that's a bigger issue for this company. But still, I mean, at some point the valuation is going to matter, and this company is not just based on that one earnings call. Wall Street always likes to be very short-sighted. That's one thing that you always have to remember, that they always take it quarter by quarter instead of taking it year by year or even like for the next 5 years. If a company misses guidance or misses estimates in one quarter, delays something in the next quarter, has some of the quarter like supply chain issues, right? Those are a big thing for AMD, Nvidia, but they were all short-term things. Like over the long term, it wasn't going to matter because eventually all of that was going to get sorted out. And what happened with AMD, what happened with Nvidia, they ended up rocketing all the way out to new all-time highs. But in that time, I remember like in the spring of 2021, like earlier this year, that was the biggest issue, and semiconductor stocks were just getting hammered. So short-term, you want to look for short-term weaknesses, but there's still long-term growth is still intact for those companies. But Sam will continue to kind of monitor, what their growth looks like in the future, moving forward. Let's take a look at Palantir and how that stock is doing. So down about up 1%, $29 almost. We got resistance at roughly $29. We're pretty much at resistance and our target here for Palantir. That is incredible. So $28.98 is the actual high for the day, and resistance stays put at $29. We're literally at resistance here. So let's take a look at the 1 minute. Look at 1 minute. This is the 1 minute. A lot of buyers stepped in. Same with Alibaba as well. But of course, Apple and Amazon pulling back here. Tesla also flat. Yes, Kimoy, I'm actually looking at Autodesk as well. Let's take a quick look. So we're pretty much flat, up over 29 basis points. We did establish a position in this recently, and I will continue to add more if it drops further. So, but yeah, Palantir, $29. We're like $29.10 is the high for the day. So there we go, $29. We're hitting that resistance, hitting that higher high. This has been a strong rally for Palantir, right? Coming in from lows of July 19, it's up a little bit over 41%. So $30 is only $1 away. So we are just a little bit away from that $30 mark. This is going to be the first time Palantir is going to be testing those levels since February. So we're talking like 7+ months for Palantir to not have tested $30. So let's take a look at the indices. The Nasdaq down 29, the S&P down 14, the Dow is getting bought up. So all indices falling fast. I think you mentioned mostly the Nasdaq, or you are mentioning mostly the Nasdaq because the Dow is doing well and the S&P is also getting bought up for the most part. So, all right, that right there is going to be the 5-minute chart for the indices. We got Palantir at 29.10, 29.12 here. Strong move to the upside. Tesla flat again. We covered that. Let's see. I love Palantir and Baba Carp. Every time ChargePoint gets close to my $20, let's take a quick look at ChargePoint. So ChargePoint, it's up closer to 1%, so $21. That's where it's trading at, but 19.24 in my opinion, that's going to be a better support level and an area of demand for ChargePoint. This could also be seen as some type of a positive divergence, similar to what we have seen for SoFi. So you'll notice that the RSI obviously is not going as low as it did the previous time, and in fact the price is continuing to make these lower lows, right? So there is some form of bullish divergence for ChargePoint. So this could on a technical basis lead to a potential breakout and a reversal here, but I still want to mention the valuation that it trades at over 65 times sales, which is pretty high for the company, right? Just based on that valuation metric. Redfin pushing up over 4.4%. Definitely a strong gap up here on the company. And Matterport is up over 2.9, almost 3%. So strong move to the upside here. For Matterport, the RSI MACD remains a little bit on the overbought side. Etsy is on the move, up another 1%, trading all the way as 228. Robinson, thanks for opening my eyes with LUV. So yeah, Southwest is actually a good company in my opinion. As a recovery play, I like it. I like Southwest the most out of all airlines because of the better balance sheet and just a simpler business model. When you compare the load factors, like how many people you need to break even on a flight, Southwest has the least number because that's what you want. If you want more people to break even on a flight, that's actually worse because then you need to fill the flight. With load factors being low for Southwest, which I think is the lowest the last time I checked, you need less people. So even if you fill in fewer people, I think Southwest is going to be well. I think it's the first or the second one that's the best for that metric. And of course, the balance sheet is one of the best for the companies. All right, let's see JWN. So let's take a look at Nordstrom. So starting to recover here, but getting tagged at our resistance at 2850-ish. So high for the day, 2835. So that is going to be the next resistance level to watch. Intraday, you'll notice that we are almost getting tagged at that level, and then we're going to watch $30 as next. But this could be signs of recovery here. With the RSI pushing higher, the MACD also starting to push up, crossing over the signal line. All we really need is a breakout over that resistance of 2850 in order for us to see some more upside potential here for Nordstrom. Talking about Digital Turbine, strong move here, up over 3.7%. So it actually gapped up, broke out over that resistance, $60.65, and then consolidated sideways at that support of $60.65. So this right here was a support for APPS. And then you'll notice that now we're approaching our next resistance and the target sitting roughly at 67.25. So that would be the level to watch. In my opinion, we have gone rejected at that level. We got the 200 SMA sitting right there. So that would be a very, very important level. I wouldn't be surprised if APPS actually does get a retest of $67 today, just based on the momentum that we're seeing. And the volume so far, 600,000 off of 4.8 million. I think we may be just on par with the 10-day average volume for APPS. So $67 next resistance to watch. All right, so indices not really moving. VIX is still up over 1% here. Palantir at 29.18, with Alibaba also getting bought up quite substantially here, up over 2%. So strong move for both of those companies. Let's see Ford. So Ford here, up over 13.65, up over almost 2%. I want to see very quickly. That's an alert. So it's up another 92 basis points. I want to add more shares of this company. We actually did start a new position in this. It's another dividend play, which has already come down substantially. And now, right now, it's starting to go back up. But I would love to buy more shares of this company here. But this right here, Ford, it was on a downtrending channel here, making lower highs and lower lows. And that's what we want to see for NIO, right? This is a breakout in action right now for Ford. And you'll notice that we're breaking out over the 50 EMA. We're breaking out over this downtrending channel. And that's what needs to happen when stocks are in a downtrending pattern where they continue to make this lower high and lower low. This is like a lot of weakness. In order to break that weakness, we need to see breakouts and we need to see a higher high being formed, which is going to be this next resistance right here for Ford. So that level is going to be sitting roughly around this resistance, roughly 14 bucks. If we can get a breakout over this, then we can start making some higher highs and some higher lows for Ford. But this is a strong breakout above those moving averages, which is very good for this company, and we're now starting to push higher. Volume looks decent, with about almost 13 million shares already traded for this company. All right, let's take a look at Starbucks next. So SBUX down still, just hovering around that support. You'll notice that $114. This is going to be a support level right here for Starbucks, sitting roughly at $113, $114 per share. Upstart is $305. Oh my God, that stock just, yeah. I think that stock is even better than, not better, but like that momentum, the sustainability of that momentum is even better than what we have seen for Tesla and for like a lot of other companies. But it's just so reluctant to come down, right? The valuation is just so high. I think trailing should be a little bit over 1,000 PE, but it just continues to push higher. But Starbucks, $113. That's going to be the next support. We're starting to make these lower highs, similar to what we did here before we saw that breakout, right? So lower highs, and then we saw a breakout for Starbucks, and that was a good 15% breakout here. And now we're starting to form a very similar pattern with these lower highs for the company. So I would allow Starbucks to kind of trade within this range, and you'll notice a very similar pattern here. So again, lower highs, horizontal lows, and then a breakout, and right now we're forming a very similar pattern. So if we do fill this gap, then we could see another breakout for Starbucks as well. But that would be the level to watch at $113, $114. Resistance is going to be this lower high they're starting to form for Starbucks. All right, let's take a look at Nike. Nike we haven't gone over in a while, but it's got a huge gap to fill here. It was a massive breakout after the earnings on June 25th. It was up over 15%, and then rallied even further to new all-time highs of 174. But since then, you'll notice that we've come down substantially, a little bit over almost 10%. The RSI has come down, the MACD's come down, so you'll notice that both of those are oversold at these levels. However, there is still a gap to fill down below. So if we do get some more breakdowns here, I think a better support would be at closer to 144, 145. Just considering this previous resistance and the 200 SMA for Nike. And right now we just seem to be getting rejected at the 50 EMA, sitting at 161, and high for the day is 161. So just getting tagged at that level before the sellers came in. Let's take a look at Upwork. Upwork looking good, up over 2.5%. So that's very, very solid for the company, right? I believe this was a part of our swing trade not too long ago. This, SoFi, and I think a couple other companies were part of our swing trade. But this has been a strong rally for SoFi. And there were two support levels that we were watching for SoFi, right? It's just bouncing off of that support. $40 was first, $35 was next. Those are the two support levels that we identified, keeping it very simple. And you'll notice it perfectly bounced off of that level, up over 22% from those highs. $50 is going to be that next resistance level to watch for that. So I'm going to send out an alert very soon on this over at our Discord once I'm done with the live stream. But that would be the next target and the next resistance to keep in mind for that. So Myhan, it should be actually in the Trade Ideas channel for Upwork. That was a swing trade on there. It wasn't on the alerts, but on the Trade Ideas channel. Let's take a look at Qualcomm. So Qualcomm. So pulling back here, Qualcomm is actually a little bit undervalued at these levels. So if you come down, to this, you'll notice that it's trading at 17 times earnings and 4.86 times sales. So that's actually very, very undervalued right now for Qualcomm. And again, this is like a fabulous, design chip maker, kind of competes in the same market as Nvidia, AMD, and some of those companies. So right now, breaking down below 140. So we'll go ahead and turn this level into a resistance for Qualcomm. And the next support to watch is going to be that 300 SMA. But if it ever comes down to 123, I would be more than happy to kind of pick up some shares there. Just considering that it would be down a little bit over 25-26%, the valuation would be much, much lower for Qualcomm than where it is today. And that's also a triple support here for the company. So overall, like when you align all those 2 to 3 things, valuation, technical support, and the discount, it makes for a really sweet deal at 123 for Qualcomm. But that still means that we have to pull back another 9% from current levels. You could certainly start a new position, in my opinion, here at the 300 SMA, but just remember that we're trading below the moving averages. The momentum is to the downside, and it could very well break down even further, potentially make its way down to 123. So that, I think, it would be a better deal for the company. Steve, the quadruple witching thingy already did not happen. So if you come over to let's just go over to this unnamed watch list, or the chart. And if you have your TradingView chart, you can actually go over to the T-Vol index. It's part of our alternative watch list. So let's just go over that very quickly. So alternatives, and we're going to come over to T-Vol right there. So this is the index that basically spikes during quadruple witching Fridays. And again, these are all the third Fridays of the month. This is the total volume on the New York Stock Exchange, and you'll notice that we have seen a spike September 18th, December 18th, March 19th, June 21st, 25th was kind of like a couple days of spikes, and September 17th at 4 p.m. you're going to see a spike once again at this index. That's going to probably be roughly whatever that number is. It's a pretty large number. I think it's the number of shares that are being traded on the New York Stock Exchange, so that number will potentially spike as well, and we could see jump like another 200-300% for this T-Vol index. And it really depends how the VIX reacts to it, right? If we see increased volatility, right now we are. So the S&P, what happened here? Guys, we're breaking down too many stocks. We also got to cover the indices here. We lose track with the indices sometimes. But the NASDAQ down 0.5%, and the S&P is up over 48 basis points. I mean, the VIX was the Q here, up over 4%. I was like, it was up 0.5%. How did it spike to 1946 here? But yeah, so that would be the one to watch on quadruple witching. If you get that spike here, of course we will, but it's just a question of whether the VIX will react to it or not. But again, we're gonna break down a complete watch list here, alternative watch list. It goes over a lot of different things. It goes over GDP, personal income, savings rate, money supply. We got the unemployment rate over here, 5.2%, which basically dropped, from 5.4. So yep, 5.4 to 5.2, and you got a lot of different things that we're watching on this alternative watch list. But yeah, the market's here, starting to pull back. Kind of hoping this will drop more. I just want it to happen already. Yeah, I mean the markets, if they do come down, that's going to be strong deals here. And I think this week will also be a red week for the S&P. So we come over to the weekly chart. So yeah, this would be the second week that we're seeing a red week if we close around these levels. So 1.69% drop the prior week. This week we're down a little bit over 17 basis points. The NASDAQ was down over 1.6% last week, and we're down another 6 basis points so far. So yeah, if we close down 40 basis points or more, this is going to be a red week. If we close above that, it's going to be pretty much a flat week for the NASDAQ. And looking at the Dow, last week we were down over 2%, and this week we're down a little bit over 8 basis points. I mean, this week has been pretty much flat, and that's also ahead of the FOMC meeting, which is next week. Again, Tuesday and Wednesday, which is going to be September 22nd, 21st, so 21st and 22nd, it's going to be very, very important for the markets. Jerome Powell's also got his speech coming soon. So I feel as though I'm already quite proficient with the markets, but you are by far the best stock YouTuber, deep understanding of macro fundamentals and technicals. I would probably buy your course. Thank you so much. I really appreciate that. That means a lot to me, and I'm glad that you are more proficient as you were before you came here. So that really means a lot. And that's the whole goal, right? It's for us to understand the whole story, a holistic approach to investing, understanding fundamental analysis, valuations. It's super important, always have been, always will be. And then technicals, of course, in order to understand support, resistance levels, charts are your guide. And macro level, just understanding tactically, which sectors are going to do well, which ones aren't, how interest rate affects the markets and the economy. All that I think is super important. But thank you. I really appreciate that comment. I thought the goal is to get lampposts. Well, yeah, sure, that too. But it really depends what your type of lifestyle is. I don't personally like to spend a lot, so, but But yeah, it really depends on what you're looking to do here. So, all right, let's take a quick look on some of the stocks here. Palantir still holding up at 29.10, 29.20 is the high. Tesla's up to 760, and Alibaba pushing higher. Apple is starting to pull back 147 now. So, definitely pulling back here. Apple is right here, 147, down about 1%. And looks like Apple is breaking down below 50 EMA, right? If I'm not mistaken. So that's the weekly. Let's go over to the daily chart. So yeah, we're almost testing 146.99 is the 50 EMA. We talked about this in our yesterday's market update, and how I personally do think that we're going to see a breakdown here. Wouldn't be surprised to see one. Right now, just 146.97. We're literally at the 50 EMA. Like, this is about as clear as we get tagged at the 50 exponential moving average. The next support would be at roughly 145. Previous support here. But I think 127 to 133, kind of aligned with those moving averages, would be a better support level for Apple. Let's take a look at Vail. Vail is down substantially from its all-time highs. It's coming down under 4% today. So from its recent highs, it's down a little bit, I believe close to 25%. So 30% now after the sell-off, and 6.4% yield. So Vail, definitely, in my opinion, they're giving out dividends $1.54 per share on the 30th. So Vail, in my opinion, in terms of the infrastructure bill and construction and whatnot, this is a stock that I can consider for the dividend portfolio only because of the severe discount and the sell that we're seeing, and the 6.4% yield on cost based on this price, $16 per share. However, I will mention the momentum is too much to the downside, and we are also approaching some type of a support here at close to $16. So I would actually watch this support very closely today and going into next week. The RSI has just gotten crushed at 20, and the MACD has been going down as well. So iron ore prices are lowest from 10 month, and that is the main problem, but I suggest FXPO instead of Vail. I'll take a look at FXPO as well. But Vail definitely very oversold. RSI is down, MACD is down, trading below all three moving averages. $16 is going to be the next support level to watch. And if you do get another breakdown here for the company, okay, so this is also previous resistance from 2018. So if you come back on the chart, 2018, we almost got tagged at that resistance of 16, which in turn became a support once we finally broke out. And right now we are trading at the same price. So if you were to kind of mark another line here, roughly at around this $15 per share level, previous resistance, which could possibly also act as a support in case we see some further breakdowns below $16 per share. But I'm going to be doing some deep, thorough analysis on this company to see if it makes sense as a dividend play. For like 6.4% yield is pretty high. Let's take a look at FXPO. I've actually never looked into this stock. So trades on the LSE, that's a London Stock Exchange. So I won't be able to personally trade it, but the valuation definitely looks cheap, and the dividend is 10.98, 11%. But you also have to consider that this is based on the pound. The dividend, I believe this is based on the pound, because right now it's trading at 323.6 pounds, not the US dollar. And you also have to consider 11% yield on pound, and then what that forex exchange is going to be based on the pound versus the US dollar. So, but also testing 300 SMA here, testing at roughly 271. That's a support level to watch if in case we break down even further. To watch here at $276. Mark says, Cowdy, you're becoming a dividend trader. You're too young for this type of investing strategy, homie. That's a great point, though. But like the problem is that there in terms of growth stocks, the valuation is a big concern for me, right? I was just looking at the screener today on Finviz. I was playing around with it. I put in all the filters that I wanted to get. There were not a single mega cap stock, and I kid you not, there's not a single mega cap technology growth stock that's growing its revenues, that's growing its PE, that's growing its EBITDA, that's trading at less than 25 times price to earnings or price to sales. There's only a few companies. Intel is one of them, but it's also not growing its revenue. Their revenue is expected to decline. Qualcomm is another one that's already down. That's why it's on my watch list. I will be doing some analysis. But in terms of growth, like, it's hard to find companies at fair valuations. You're either overpaying for a stock or it's too risky, right? Like, I'm not gonna go out there and start buying Upstart at this level, even if it's super high growth, because it's so overvalued, right? And there's so many stocks like that in this market. That's why we have to find alternatives to cash, right? If you're sitting on cash, whether it's 20%, 10%, 5%, 30%, whatever that amount is, it's basically just burning if it's sitting, right? If inflation's so high right now in the US, 5% plus, that's why I want to deploy it. And in my opinion, dividends are a way to do that while you're holding on for better opportunities. And you're looking into some of the defensive value stocks to take advantage of that exposure. And if the market corrects, if the market pulls back, and you see those deals come into some of the growth stocks, then you can perfectly reallocate and move more towards growth. But in terms of valuations, it's hard. It's tough. I mean, this market, I don't want to overpay for stocks. That's why I've been buying a little bit of undervalued companies like Vertex, I believe, is undervalued. Corsair Gaming is undervalued. Take-Two Interactive is borderline rich here. Apple, I can make an argument, it's like fairly valued, but I would like to come down for that as well. So that's why it's a little bit strategically different just based on where we are with the markets, right? I can't keep buying growth on every single market, right? It's a different type of market. That's why we have to kind of pivot and kind of play along with what the market is doing. Let's see. So, all right. So Glenn, thank you so much for that. I really, really appreciate it. Really appreciate the comment there. But yeah, the market's definitely pulling back here. We got the S&P down about 50 basis. But again, I'm open to ideas. So if you guys tell me there's a growth stock that's growing the revenues, by a lot, 20%, 30%, 40, 50%, that is still trading at a reasonable valuation. We're talking less than 25 times price to earnings, less than 6 times price to sales. You guys bring the ideas, right? I'm more than welcome to go over these, do a technical and a fundamental analysis. And if it makes sense, we'll definitely establish a position in those companies, right? Palantir is a great example. Palantir, 30% growth compounded for the next 5 years. That's a strong growth rate, right? That's a very, very good growth estimate. Trades at 30 times sales. 30 times sales. So you have to really pick and choose, right? You have to pick and choose. Are you willing? And 454 times cash flow. I'm bullish on Palantir because I do think fundamentals are going to substantially get better. But it really depends, right? Are you willing to pay that much for a P ratio, or are you willing to just wait for a correction here? So Amazon has the growth, correct? Amazon has the growth. That's why we've been adding Amazon stock. We've been buying Amazon, and I want to buy more. If it comes down, I will be buying more for Amazon. What about DE? So John Deere. Let's take a quick look. So John Deere, I know for a fact that it's undervalued at these prices, I believe. Let's take a quick look. So 20 times earnings, 2 times sales is very undervalued. But take a look at the revenue right here. So 29 billion went to 37 billion, went to 38 billion, then a drop down to 35 billion. And quarter over quarter, it's been kind of like stable, right? It's been more stable. So the revenue growth in general, and even the margins have been kind of back and forth, is not as high as what we have seen for like a tech company or a growth stock, right? So this is good. This is great, undervalued. I think it also pays a dividend of 1.17%. But revenue growth, EBITDA growth, free cash flow growth, margin expansion, those are some things that we look for in our checklist. So ZIM, yes, packaging company, we're definitely watching that as well. Alibaba, you're right. Alibaba's got great fundamentals, but Alibaba has different types of issues, right? It's got regulatory risk and different types of issues that are very persistent for the company, right? We're taking 1 step forward, 2 steps back for this company. So it's on the watch list. I may pull the trigger at some point, but undervalued, strong fundamental growth, but it's got a whole different type of regulatory risk that can't be priced into any type of model, right? The company is reflecting, the stock price is reflecting that. Please keep GLBE. So Global E Online. So right now trading at 10 billion market cap. We got strong revenue growth. That's good. Recently turned profitable. So it doesn't have a P or anything. So we're trading at 14 times price to book. Enterprise value 9.3 billion. Seems like it's got a really good balance sheet too. Practically no debt. So we'll keep a watch on this stock as well. I just want to make sure that the dilution is not substantial. See the statistics. So yeah, 2020. So quarter over quarter, they were at 32,000, then went to 145 million shares outstanding. So yeah, definitely we'll keep it on my watch here and add it. So yeah, it's gonna be on my watch list. 2.6% on the day. Resistance to watch is gonna be $83, $84. Caterpillar, let's take a quick look. Coming down $200, definitely breaking down below that support here further, and that 300 SMA is going to be the next level to watch. A lot of undervalued stocks in Europe. Yeah, I mean, emerging markets could also be opportunities, right? Europe is not quite an emerging market; it's pretty well established. But you know, stocks over here in India, China, even in Europe, there may be a lot of deals that we can kind of filter out to, because the screeners that I was doing, like the filters, was strictly for the US market. That's why it was difficult for us to find companies that are growing substantial revenue, EBITDA, free cash flows, but are still undervalued. There's not a lot. There's very few. But India is supposed to grow insane over the next decade. Yeah, that's very true. I think majority of our population is between like the millennials, like 20 to like 35, like the working age, like the prime age of working. So that's why the productivity is expected to go up substantially, and as a result, GDP is expected to grow a lot for the next 10 years. Let's take a look at Zebra. I don't know what that stock is. Zebra Technologies. So, all right, 580, 31 billion market cap. It's got pretty stable revenues and profitability, so that's good. That's very good. 41 times earnings is a little bit on the rich side. Balance sheet looks very good. Cash 339 million. Debt is a little bit high, 1.1 billion, excuse me. And then we got pretty stable common shares outstanding, so not a lot of dilution here for the company. So I'm interested to find out what they actually do. Designing, manufacturing, selling automatic identification and data capture products. Interesting. I'm gonna add this to the watch list. Thank you for mentioning this, whoever did. So let's see. Zachary, thank you for mentioning this stock. We'll definitely take a look into this, and I'll do some fundamental analysis on this. Year to date, this stock is up over 51%, so that's very, very strong. ASAN, let's take a quick look at that MT for you. So strong move to the upside. You know, this is a 358% gain. RSI MACD 2 overbought, so I would be very, very concerned with this, just based on where the valuations are, right? Just based on where the technical levels are. RSI overbought, MACD overbought, too high right now. So I personally would not be starting a new position or buying at these levels. But if it does come down to that 50 EMA, if the RSI cools off, the MACD pulls back, then yes, it would make a lot of sense why we can kind of start looking into this. And then another stock that you mentioned was AMAT, so AMAT, Applied Materials. So we got a pretty reasonable here, so just trading sideways. Resistance at close to $142. Just getting tested at that resistance. We got rejected once, twice, 3 times, 4 times at that level. And the support is going to sit at roughly $124. The RSI and the MACD not quite overbought, but that is a resistance here. So we have gone rejected at that level. And previously we basically sold off over 13%. We sold off a little bit over 13% here. And this right here was a drop of 20%. So that would be the level to watch as a resistance. Let's take a look at Visa, under 200 now. So there we go. It's 220. Actually, not 200. What do you think about Visa under 200? EMA. Okay, so under 200 EMA. So it's now trading under 200 SMA now. I got excited knowing that Visa was down under 200. But 220 is going to be that next support level to watch. All the way as low as $205 per share for the company. That's going to be the next level to watch for Visa moving forward. I'll probably add 205 for the company, and then under 200 I'll be adding a lot more. And even for companies like Visa, right? Great companies, strong revenue growth, great margins, valuation 46 times earnings, 21 times sales. Like, what the heck? All of them are just trading at substantial valuations here, right? So that's always going to be important. Valuations, fundamentals, always important, regardless of whether you're just investing in growth, dividend, or value, right? You have to still underpay for something and expect for the markets to expand their multiples and the valuations to grow, right? That's the whole game here. FDX. So Mark, thank you so much. I appreciate that. Have a chai tea on me. Happy Friday. Your advice and counsel has helped me grow wealth in a stable, healthy way. Thank you for everything. Thank you, Mark. I really appreciate that. And again, one of the things that I always mention to people is that before we can even think about growing our capital, it's always about preservation. It's always about being able to preserve what we already have, and then we can focus on how we can grow our capital. So in the markets, making money is just as easy losing money, right? Losing money perhaps is probably easier than making money. But if you're just doing it the right way, it can be fun and it can be really exciting too. So preservation, and then we look into growth. So Mark, thank you so much for that. I really appreciate it. There are a ton of small cap, mid cap stocks down over 50%. Lemonade, Plug Power, Fuel Cell. So do any of them look exciting to you? So the thing that I will say about small cap, mid cap companies like that, first let me just go over FedEx very quickly. So FedEx, support is going to be sitting roughly around this $234, even as low as this $245 level. We're breaking down below some of the moving averages here, trading below all moving averages, 50 EMA, 200 SMA, 300 SMA. And that would be the next support at 245. It's been a strong downtrend here for FedEx. 20%. Revenues have been very stable. One thing I will mention that Amazon is eyeing for the market share for FedEx and UPS and USPS and all those companies, because they're launching their own shipping and freight business, right? So very undervalued FedEx right now, just based on where it's trading. It's had a huge run up, as more and more packages have been delivered. So from the pandemic, it's done really well, 242%. But now I would just wait for it to see a retest of 245 as low as $234. Now, in terms of small cap, mid cap companies, we've already talked about how, there's a lot of mid cap and small cap stocks that are basically down, and they have been down substantially from their February highs, right? They're all on my watch list, like Plug Power, BNGO, we're talking NNDM, we're talking a lot of companies like Fuel Cell, CLSK, all the ones that you mentioned. They're on the watch list, and we really need to understand what their fundamentals are going to look like over the next 4 to 8 to 12 quarters. And the reason I say that is because they were all concept ideas, right? A great example is QuantumScape, right? QuantumScape was it was a great idea, right? Solid state batteries, it was very, very strong in that EV space. It rallied over 1,000% in not a long time, like from October to December. Strong rally, but since this February correction, it's just been selling off over 84%. It hasn't really found its way back up. But I will be watching this. It's on my watch list to see what the revenue and the fundamentals look like, because now since the price has come down so much, if the fundamentals, the financials make sense, even if they get better over time, then this is going to be a significant deal in terms of that growth sector, right? Growth stock. So I can't believe QuantumScape is still at $20. It's way too high. That's right. I mean, if you take a look at the valuations based on the concept and just based on no revenue, it still seems high. But as the revenues ramp up, as earnings ramp up, we could see significant opportunity in this stock. So these are all on the watch list as they continue to announce revenue in the future, right? Quarterly reports come out, earnings come out. I mean, some companies. What company was it? I think it was Nikola. Nikola, I think it did like $5,000 or $10,000 in revenue one of the quarters, which was like a complete joke. I forgot when it did that. I think very recently. I'm pretty sure it was Nikola. It might have been some other company, but I remember one quarter it basically announced that it did like $1,000 or something, like very, very low number in terms of earnings. So we need that to develop more. We need these companies to expand their revenues and earnings and whatnot for it to be a better deal. Let's see, Apple's down to 1.4 here. We got the markets pulling back. S&P is down over 66 basis points, and NASDAQ is down over 67, and we got the Dow Jones down over 167 points here. Cameron, thank you so much for that. I really, really appreciate it. Just want to say I hope you're having a good day, and I appreciate you a lot. Thank you. I really hope you have a great day as well, and I really appreciate that comment. Vail below 16, so $15 would be the next level to watch, and definitely there's a lot of momentum to the downside here for this company. So we would need for it to kind of stabilize some of the selling pressure before establishing a position, just given where the dividend yields are and the valuation for this company. But yeah, I mean, overall, the market seems to be, some of the other stocks, the Fiverr is up another 1.9%. It's trading at 198. So Fiverr is one of our growth stocks, right? So 198.50. So we're now starting to see that move to the upside even more. My next resistance and target is at $217 for this company at that level. And yeah, both Fiverr and Etsy doing really well. These are perhaps the two growth stocks that, in my opinion, are like borderline rich. Still a little bit on the overvalued side, but I don't mind establishing positions in these companies, which is why we did. And they've been on a strong breakout here. Fiverr 217 is going to be that next resistance to watch. Yeah, pretty sure it was Nikola this time last year. So okay, that's what it was. When are you buying Google? So we'll soon. I mean, it's down about 1% today. 2800 is on the watch. So that level we're watching, kind of aligned with that 50 EMA. If it comes down even further, 2550 will be the next support level to watch. And this would be like a great addition. Google is another one, right? Google is a great company, great strong growth rates. This is a company that's actually at a fair valuation, 31 times earnings, almost 9 times sales. Relative to its peers, you compare that with Microsoft, you compare that with Amazon, that's actually lower price to earnings, price to sales metric, not with Amazon's price of sales. Price of sales for Amazon is very low. But for Google, I think that's a fair valuation just given where the growth is for the company. So, this is going to be one of those another growth stocks that we can add in the future. Look at that. VIX over 20, up almost 8% here. That's very normal because the markets are pulling back. So, we got the S&P falling over 66 basis points. We got the Dow and the Nasdaq also coming down. So, same with C3AI. So yeah, definitely agree. This is also on the watch list. Watching it very, very closely based on the earnings and the fundamentals and the revenues that come out in the future. But yeah, Alibaba, strong move here, 2.3%. Let's take a look at our Chinese watch list. And we got everything green. NIO is also up over 0.5%, nothing crazy, but we got Baidu that's up over 2%, Tencent up over 1%, we got JD.com over 1.3%. So Baba definitely pushing higher. Yesterday we kind of saw like a symmetrical triangle breakout for Alibaba. So this right here was the entire pattern for the company. Let's see 5-minute. So this right here was the actual breakout here for Alibaba. So you'll notice right there, we were kind of at the open, we were making lower highs, higher lows, and a huge breakout, and then rallied back up to 157. And today it feels like a very similar type of pattern where we're starting to see that breakout even further for the company. Milad, that's a great question. So for the Nasdaq, we have to continue to monitor this, right? This is what I like to call like our cheat sheet for a market drawdown. 2 to 3% is considered a dip. So right now for the Nasdaq, we are in a dip. We literally are in a dip. 2.01% is what we have seen from all-time highs the markets come down to. Anything between 5 to 7% is a reasonable pullback. Anything between 8 to 12% is a strong correction. And this is debatable. It could be a little bit over 15%, 20%, depending on who you ask. But I think a crash is going to be 15, 20% or more for the markets. So if we enter pullback or correction territory, that's when I will start buying. In a crash, I will aggressively be buying a lot of stocks at those discounts on those valuations, and of course may even just start dipping into margin at that point if you start crashing pretty substantially. So this is going to be the cheat sheet. This is the one to watch. There's basically 2 to 3 different things to watch. One is the actual indices and the cheat sheet and where we are. The other is the VIX and how high we go. How high we go for the volatility, 29, 30, or much lower, 25, those levels to watch. And then based on a tactical approach, that you can basically look at the relative performance indicator, like this one, Nasdaq relative to the Dow, and how this index does. If you come down to some support levels, like we did, back when February and May, we came down to 38, then that would be the cue to start loading up on tech and growth and start buying the Nasdaq heavy stocks at this level at 38, because we perfectly got a validation at that support here and the support at the RSI, and then started a strong rally for the Nasdaq. It's just as simple as anybody who held the Nasdaq index between this time frame, between May and September, outperformed the Dow by that degree, by 17% from this relative performance index. So, all right. Let's see. I think you should take a look at Evergrande's situation and explain how it connects to the U.S. market. That's a great question. I'll probably do that soon, and I will do some deep dive and some thorough analysis on that as well. I'll probably do like a separate video on how, like, if there are any ripple effects of that over to the U.S. markets. I'll probably do that in the future. But all right, so thank you so much, you guys, for joining in. I really appreciate you guys' support. So again, I hope you guys have a fantastic day and a great weekend ahead. And again, next week is going to be super important. We got the FOMC meeting, we got the Jerome Powell speech, and be prepared for the quadruple witching, which comes around 4 p.m. Eastern today, right when the markets close. You want to keep a close eye at the T-Vol index, the VIX, and the broader indices as well after hours. So thank you so much for joining in. I really appreciate it. Make sure that you join our Patreon if you want to, down in the description below. Visa down under 221. That's good. If it continues to come down, we are going to be buying more. But again, thank you so much for joining. Hope you guys have a great weekend. Take care. I'll see you guys in the next live stream.